Having been on the market for over 10 years, crypto is widely known for its high volatility. It's like on a beautiful day, all of a sudden the price starts falling off a cliff without any prior signals or signs that it will bounce back. Must be a disaster then, right? Well, here's the fact. You're not alone in that scenario, as even the most professional traders can't accurately foresee the movements every single time. The difference between how you and a professional trader react and deal with these unexpected situations is different. But just like a hunter who finds a bear in the forest, will you run away or play dead? Or will you teach that bear a lesson? That's what we're going to talk about today, how you can take advantage of the bear market. Let's get it.
The bears catch only the tastiest, most tender salmon, which is exactly what we at John West want.
Welcome to Big Boy Crypto, the hardest working channel in all of cryptocurrency. If you're new, hit that subscribe button and check the description for links you can use to connect with me and the Bit Squad. All right, guys, obviously market prices will always be swinging up and down. If it didn't swing, you wouldn't be able to make any money after all. So in this video, we're not going to be discussing those periods when the price just wavers in an inconsiderable amount of amplitude. Rather than that, we're going to focus on the events in which a sharp decline occurs that drags your fund to an endless abyss, just like your hopes and dreams. The first and most important thing to do in such situations is to keep a cool head. Don't be freaked out, as it will blind you and lead you often into bad decisions. It's been proven that panicked public sentiment was the force driving traders to sell out, sending a substantial coin supply in the market and making the plunge even worse. Therefore, staying calm is the only way to calculate how serious it is and to take the right actions. That being said, let's go to the topic that concerns us now. What should you do when the market price keeps sinking? This is definitely a complex question, but it's not that difficult to answer if you know exactly who you are and what you want. Why am I saying that? Well, because each trader and investor has different styles and different goals. Thus, how to deal with a crash will be different accordingly. Guys, just as the Oracle of Delphi said, what's that? You don't know Greek? Oh, it means know thyself. Are you a day trader just looking for quick wins, or do you see the big picture and play the long game? Press pause, and after you've done some introspection, resume the video. It wasn't really pause, that's just me making a face. The next step is to evaluate the situation, though. It's critical to quickly grasp all sources of information, make an assumption. Whether the slump is just a false alarm and it may be a recovery in no time, or the entire market is facing a real devastating breakdown. We've seen it. To do that, you need to be able to use technical analysis to read price charts, as well as combine other major factors such as the overall economics, market sentiment, and so on. If you're an amateur and you have completely no dang clue of what is happening, remember the first rule. Number one, we talked about: just don't panic. Instead, try to hear comments from some key, reliable sources, or better yet, watch previous videos on this series where I explain what technical analysis is and how you can do it yourself. Anyway, though, depending on what type of trader you decide you are and how serious your assertion is, there are a couple of options you can consider. The first one is to sell your crypto, stop the bleeding. This option is preferred if you are a speculator and want to cut your losses as low as possible. If you predict an upcoming wave of non-stoppable plunges, to immediately empty your wallet is a reasonable choice. But like I said before, mass selling could result in a chained collapse, so consider it carefully, especially if you're holding a huge supply, as releasing it will have an immense impact on the market and your portfolio, especially in smaller coins. In case you are a small trader, it's okay to sell out, but you may miss the fortune if the market bounces back and rises again. Fortunately, modern crypto trading has incorporated many tools to support traders. In this situation, the contract option is a very common method to help you gain from selling even when the price declines. If you go for a short option, which actually allows you to sell at a higher price and buy at a lower price, you can earn profit from every drop in the market. The fact that you guys don't need to buy crypto reduces your risks. You can also utilize leverage to amplify your income. Of course, to buy short options, a minimal deposit is required, but if the price crashes, be in your favor. Another path is to hold onto your portfolio or even buy more dip. Yep, you heard me right. No selling. Instead, this is an opportunity to absorb the drops at a low cost. If you keep yourself updated, you might have heard that Bitcoin's price just keeps going down to around $10,000, but the market shows more signs of demand from traders. Isn't that surprising? In truth, this strategy is popular among long-term investors who keep their coins for a long time and also have deep knowledge as well as confidence in blockchain and crypto. It's normal to watch day traders or speculators purchase at low prices and sell at higher prices to make up earnings from the discrepancy. However, the amount of profit is tiny, and it's not easy if you want to buy a mass volume. In contrast, after a crash, professionals may aim to take over a load of crypto when the price drops, as it is cheaper. Their acts of buying a big heap can also kick up the market demand and raise it again. It's crystal clear that the profit margin then is much wider compared to a regular trading way. These two are the most used techniques when it comes to coping with a crypto crash, other than, of course, crying in the shower. But there's one more element you need to be thinking of: time. Decisions need to be made immediately, which could lead to mistakes. So the best thing to do is be ready for damage control by preparing yourself for the scenario before it occurs. These are some of the things you can do. First, knowledge is power.
And knowing is half the battle.
So learn about crypto and trading them on the market. This doesn't only include checking which coins are popular or trendy, but also means to learn the ins and outs of trading. If you're watching these in a time of calm or bulls, congrats, you're doing it right. Watching this as the market crashes and you're trying to learn what to do, well, I hope you learn from this. Let's get back to our topic though. Once you've mastered basic techniques like technical analysis, you can move on to adapt advanced tools that will absolutely make crypto trading much more enjoyable. You can utilize risk management tools such as stop loss orders or margin trading to better control risks and maintain an acceptable amount of losses, or even eliminate them altogether. Besides, as mentioned before, there are contract options and leverage that can be used to take advantage of a bearish market. The next piece of advice is keep track of the market. Never miss a single detail. You know that crypto is volatile and its price can fluctuate without any signals. So your job is to keep an eye on them. You have to have a feel for the markets. Detecting trends is crucial. Finally though, get yourself ready for a loss. I didn't mean that you'll actually lose, but you need to be aware of the danger. Eventually, crypto trading or any other investment bears inherent risk. There's no guarantee to win without any threats. Unless your mind is made up, you might easily be wiped away when facing challenging times and not be able to remain rational. This is the golden rule. Repeat after me. Don't invest what you can't afford to lose. But now is your turn. How are you protecting yourself against a possible crash? What is your go-to strategy if they are not enough? Let me know what you think in the comment section down below. Hope you enjoyed this video. If you did, please make sure to smash the like button and hit subscribe to become a member of the Bit Squad. Thank you so much for watching. Have a blessed day. Boy out.